Bitcoin is heading towards $55,000. Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about why a $5,000 drop may be coming very soon to Bitcoin. Today, we're going to talk about two different scenarios that may play out very soon on Bitcoin. I believe that one of them involves a slight bit of sideways trading that could be a bull trap, and the second involves a major drop of about $5,000 down to $55,000 on Bitcoin. Today, we're going to be talking about why that corrective movement may be coming, and we will also talk about how we should respond when and if that correction does occur so that we can inevitably continue to build wealth. If you're looking forward to this video, make sure to hit that like button and subscribe to the channel. But without much further ado, let's go ahead and dive right on into it. Fortune favors the brave. Where have you heard that before? If you guys didn't know, Crypto.com has come on as a sponsor of our channel, and I am very much excited for that to be the case. If you don't already know, somehow, Crypto.com is one of the largest cryptocurrency exchanges in the entire world with over 80 million users, and they are using Crypto.com for a very good reason. Those users, just like Crypto.com themselves, believe that it is inevitable that Bitcoin is going to succeed. And the way that we succeed in the cryptocurrency space is by ensuring that we are able to use exchanges that have an absolutely unprecedented level of simplicity and ease of use in their user interface. One of the things we teach is that when choosing an exchange to do your dollar cost averaging on, which we will talk about later, it is absolutely critical that we choose an exchange that is easy to use, that is versatile, that has the features we need, but most importantly is going to help us to build the habit of investing on a consistent basis. That is why I'm so excited for Crypto.com to be a part of our channel, because they help you to be consistent in your cryptocurrency investment, which leads your profitability to being inevitable. But let's get started. At the time of recording this video, Bitcoin is trading at $60,000, which is a major drop from our all-time high set on the 14th of March, 2024. We have dropped about 19% in the 47 days since we hit a $74,000 all-time high, and I've got a hunch that that is going to continue. Just kidding, it's not a hunch. We've actually got a lot of reasons to say that, and we're going to talk about them right now. You see, last week, I compared the market that we are in right now to the market that we saw back here in early 2022. In the last part of 2021 and 2022, Bitcoin went into a major correction movement that ended in an uptrend that painted out a bear flag. Well, for anybody who's been through the Cryptocurrency Technical Analysis Academy, they will know that bear flags typically break bearish about as far as the market was moving bearish into the bear flag. In this case, Bitcoin dropped about $37,000 moving into the bear flag, and moving out of the bear flag, Bitcoin would drop another $30,000. We said that Bitcoin looks like it's in a very similar position as we were in early 2022, and so far we're seeing something very similar play out on a shorter time frame. Bitcoin in the first leg of this corrective movement dropped $13,500, and so far we've dropped $7,000. If we were to move as far to the downside out of this pattern as we moved into this pattern, it points directly at this uptrending level of support right here, and roughly the level of 55 grand. This uptrending level of support in white has underpinned this cryptocurrency bull market for the better part of the last year and a half. We have used it as support over and over and over again, and recently we managed to break away from it and rally far to the upside, far beyond its reaches. Well, with Bitcoin rallying $37,000 in 51 short days, that leads us to the inevitable, pun intended, conclusion that Bitcoin is going to need a drop. Typically speaking, Bitcoin will drop 20% during this bull market. So far in this bull market, we have dropped 20% no fewer than 1, 2, 3, 4 times. So far, Bitcoin has dropped roughly 20% again, indicating that the correction may be over here, which leads us into our first possibility, but I'm not convinced. You see, our first possibility for what Bitcoin can do next from here is we can trade sideways right here above $60,000 and form a bit of a bull trap. And the reason I call it a bull trap is because we've got a flat bottom, and then we would have a very steep descending level of resistance, which would form this descending triangle pattern right here. That descending triangle pattern would likely push us down towards $55,000 anyway. So if we do bounce briefly here around $60,000, but we don't manage to rally at least to $65,000, which we probably won't, then Bitcoin will almost certainly bounce for a few days and then fall back down to this white uptrending level of support anyway. The other possibility that I think is the most likely is that in the next 48 hours, we just break below the $60,000 level in the first place. This would also be corroborated by the fact that LUX Algo has a red sell signal that was confirmed on the 15th of April. That sell signal's take profit sits down here as low as $54,500, indicating that we could drop all the way into the zone of the take profit, which would bring us down towards 55. This would also mark a much needed correction because so far, since rallying from $25,000 to $75,000, a $50,000 200% movement, Bitcoin has only had two 20% corrective movements, the one that occurred in January and the one that is occurring right now. Historically speaking, Bitcoin needs bigger corrections than that. During the last bull market, Bitcoin dropped 73% at one time, and here we dropped over 36%. Even if you take out the COVID pandemic crash on Bitcoin, we still dropped 51%. And here in the bull market, Bitcoin would drop from $65,000, 55%, all the way back down to $28,700. Bitcoin is overdue for a corrective movement, and for me to predict that we're going to drop another 5% is certainly not outside of the realm of possibility, and it's certainly not even that big of a prediction. So what do we do about that? Well, first and foremost, we don't have the ability to whine and complain if the market does go through that $5,000 crash. First of all, because I'm telling you that it may very well happen. Second of all, because we do not have the ability to complain. I mean, I guess we have the ability, but we don't have the right to complain over things that we can't control. I can't control whether the market crashes. I can't control whether the market goes up. I can make a prediction that it's going to happen, but I can't actually control whether that occurs. You see, sovereign people control the controllables, and they are patient in the areas that they cannot control. What sovereign people do, what successful people do, what wealthy people do, is they control things like their budget, like their investment plan. They control how much money they put into paying off debt and how much money they put into retirement investing, how much money they put into paying off their house, how much money they put into cryptocurrency. They control how disciplined they are about their investment. Are they doing it on a consistent basis every Friday, every 1st and 15th, once a month, once a day, whatever it is? They are consistent about that. We've got to control the controllables and be patient in those things which we are not able to control, the markets being one of them. And so the way that we can control ourselves and we can control the controllables in this situation is we can follow an investment plan. The investment plan that I teach is very simple. Every interval, for example, Friday at 5 p.m., we, if we're married, if we're not, but since we're married, we will invest the amount, so call it $100, into our cryptocurrency portfolio, which needs to be defined, on an exchange, which, by the way, crypto.com, great place to do your dollar cost averaging. Check them out. Put them in your investment plan. Links down below. Anyway, when you follow a plan and you say every Friday at 5 p.m., every Tuesday at 1 p.m., every Monday at 3:57 in the morning for some reason, I don't know why, we will invest $200 into our cryptocurrency portfolio. Our cryptocurrency portfolio is defined by the fact that we're going to put 15% into cash. Then of the remainder, of the remaining 85%, we're going to put 50% into Bitcoin, 20% into Ethereum, and then 15% into Chainlink, whatever the portfolio is. And we're going to do that on crypto.com. So every Monday at 3:57 in the morning, we are going to invest $200 into our cryptocurrency portfolio on crypto.com. That is how we're going to succeed in this market, is by building an investment plan and following it. And part of that investment plan is storing up cash. I hope that you have cash on the sidelines if you're investing in the cryptocurrency market for wealth generation in this cycle. You don't have to do this if you're investing for retirement, but if you're investing for this cycle, you gotta put aside some cash every time you put money in the market. Please do that, because if Bitcoin drops down to 55, what I'm gonna be saying is deploy cash. Quite frankly, I don't have a problem with you deploying cash now. I don't mind if you put 1%, 2%. I don't mind if you put 1%, 2%, 5%, 10% of your cash allocation into the market right now. We're already down 20%. The trend so far is that that's the extent of the drops. It's very possible that $60,000 is the bottom, but especially if we drop down to 55, that's where you start deploying some of that cash. When we follow a plan like this, it leads to success, because it's not the market that causes you to succeed. It's not the market that causes you to fail. My friend, this is both liberating and scary. It is you. It is me. The market is going to happen whether we participate in it or not. Whether I have an investment plan, whether I follow a budget, whether I, not whether the president, not whether Congress, not whether this YouTuber, not whether my friend, whether I do these things determines whether or not I or we succeed. So, my request of you is to understand that a drop very well may be coming. And also to understand that the way that we will succeed is by consistently investing, it's called dollar cost averaging, into assets that we reasonably expect will appreciate in value over time. That is one of our principles of investment. We're going to, on a weekly or at the very least monthly basis, invest in the market. And if the market drops, we're going to put more in. There's a word for this, it's common sense, but it's not taught very often. So if we drop down to $55,000, consider deploying capital. If we drop down to $55,000, consider deploying capital. Many of the altcoins are even lower, by the way. You very well may consider doing the same thing in Solana, Cardano, XRP, Chainlink, all of those. But at the very least, begin dollar cost averaging in the cryptocurrency space if you've already completed the other steps of paying off your consumer debt and you're investing for retirement. I told you we were going to talk a lot about investment, and one of the best places to do that investment is over on Crypto.com. So make sure to go to the link in the description box down below. Sign up for Crypto.com today and get started investing with their recurring buy feature. They're the place that brave people go to invest in cryptocurrency. You've got some bravery coming into the cryptocurrency space, working here. Can be scary at times. Fortune favors the brave, and it'll favor you if you follow the principles of financial sovereignty and if you sign up for Crypto.com. So make sure to check them out with a link in the description box down below. I hope you did enjoy. That's going to wrap it out for today's video. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I'll see you guys in the next video. Peace.